All right, welcome to another video. Today we're going to take a look at our covered calls, a great strategy for retirement. So if you are looking to get into retirement, maybe you're close to retirement, or maybe you have a good nest egg and you want to do this for retirement income. If you're trying to do covered calls, I'm going to share with you some insight here and make sure you understand if it's useful, not useful, profitable, not profitable for you, or it just makes sense or not. So let's kick things off. I do want to let you know a lot of these questions I get directly from my coaching students. So if you go to the tradersfly.com website, you can see there I do some coaching. So if you have a one-on-one question, you can go ahead and book one there, or you can check out some of the courses if you're interested in doing covered calls for more in-depth and detailed and more seriously. You can check out a course there, or of course work one-on-one together. So let's kind of get into it and just chat about covered call strategy. So the covered call strategy, you're looking for making some income as the stock usually appreciates or goes up. So let's say I am doing something on Home Depot. So here is Home Depot, and I buy 100 shares. Okay, so I'm buying 100 shares first. Okay, so buy some. And then what I'll do is I'll start selling calls against it. Okay, so if I go in and say I go about 30 days out, I am saying, hey, I'm willing to sell that stock at 310. The current price is 300. I'm willing to sell it at 310. Okay, so I buy the stock, then I'm willing to sell the stock. So now from this, I'm able to go ahead and make maybe $1,400 if that happens every month, right? Now, the thing is that, remember, the stock is going to fluctuate either to the upside or to the downside. So the value of the stock is kind of, let's negate that for a minute. Let's forget about that for a second. Let's look at the premium you make. So you're already willing to sell. And by selling the call option, meaning the right for someone to take away those shares at 310, because if it goes higher, they're willing to take the stock. The right of that, you get $405. Now, if you say, hey, I don't want to lose my stock, you could go further out and then you only get $160, or you could go even further out and you only get maybe $95. So what that allows you to do is kind of focus and value the stock a little more versus the other way you're making money from the call side. So if you're selling things closer in, you might lose your stock faster, but you get more money for the premium. If you're selling further out, you get less premium, but you're less likely to lose the stock. So the question comes down to, if you're doing the retirement strategy, are you looking to make more money from appreciation, or are you looking to make more money from the calls themselves or the premium that you're selling? So these are some of the things that you have to think about. First off, are you trying to live from this money? Okay, so if you're looking to say, hey, well, I want to actually live from this, well, in that case, how much money do you need? So is this a yes, no? How much money do you need? Do you need only $1,000 because maybe you get Social Security or some other types of things? Do you need $5,000 maybe for medical bills, or $10,000? Everybody's at a different point. So how much money do you need? And then how much do you have? Because if you have, let's say, $5,000 only to trade with, that's going to be a lot difficult if you're trying to make $10,000 every month. Okay. On the other hand, and most people that are watching these videos have some good due diligence, have worked well in their life, or are more successful. So let's say maybe you have $5 million in your account. Okay. Well, in that case, if you're just trying to make $10,000, it's probably a lot easier in that case, because your percentage of return needs to be a lot smaller. So if you have a simple lifestyle, but you have a good cushion, it'll be probably a lot easier. And you take the appreciation of the value of the stock into account. So let's kind of take a look at this back to our Home Depot example. So now if we just look at the premium side, well, to buy 100 shares of stock, that's going to cost me $30,000 already. Ooh, 30,000. Well, that's going to be tough if you only have 15,000. But on the other hand, on that 30,000, you might say, well, I'm making $95. Well, $95 may not cover the cost of those expenses. So you might have to then say, hey, okay, well, I'll sell things closer in. Okay, and now you make $400 every month, but let's say you do 5 of them. Okay, well, if I do 5 of them, I might be able to make about $2,000. Okay, if I do 10 of them, okay, I might be able to make $4,000 a month just from the premium, right? We're just talking premium alone. Now, to do 10, I need about 1,000 shares of stock. Okay, so to get 1,000 shares of this Home Depot stock, I'll need about that much. Now, to get 1,000 shares of Home Depot stock, you need about $300,000. Okay, so again, if you don't have the $300,000, you could, of course, do covered call alternatives like a diagonal, and there's some other ways to do other strategies, but we're just talking about covered calls in this video right now. But yes, there are other strategies, other alternatives with less capital involved. But here, in this case, that might be a $300,000 cost. And now you're looking to maybe make, 4,000 just from the calls plus the appreciation of the stock. So you could make quite a bit, right? As it appreciates, now you could be making $14,000 if this happens all the time. But remember, sometimes the value of the stock pulls back. So in that case, if it keeps pulling back, well, you might be down. Let's say here the stock pulls back $20. Okay, you might be down $20,000. Okay, but yet you made maybe 4,000 or so from the calls that you sold, right? So we made 4,000, but you lost 20 from at 280, 20 from the appreciation of the stock or the value. So in total, you've only lost about 16. So again, if you're taking the whole value into account, then in that case, it's a little bit different. But if you're just looking at, well, I'm just going to keep those shares and just keep making the 4,000 here, and then go ahead and withdraw that money as I make it and use that as a living expense. So my point is that as you look into these various factors, you start evaluating, okay, how much money do I need? What am I going to use that money for? How am I going to take it out, withdraw it? Am I looking to sell more high expensive premium in terms of the call side, or am I looking for appreciation of the stock? All those are questions you have to answer before you see if it's justifiable to make this strategy work. Also, if the stock market's in an uptrend, it's a lot easier because now for a covered call strategy, you could just sell further out, and now you get a lot of appreciation in the stock, and eventually they'll take it away, but you're dealing with the appreciation. If you're struggling with this, definitely check out the website and I can help you out. There's a lot of coaching sections that I work with people on understanding this specifically for them and looking at their personal individual situation. So if you need some help, take a look at that. There's a ton of courses. You can look at the single one-on-one coaching segment here as well. You just pay for a session, you schedule a time, and we can work together and just figure out your personal situation of what makes sense for you. But anyway, this is the baseline for it. Some things to think about. And like I said, if you want to get some more in-depth stuff that are core specific to covered calls, then take a look at the covered calls for monthly income right here course, or the coaching specifically working and trading together with you on covered calls. So anyway, I hope that helps. Truly appreciate it. Thank you for joining me. Think about some of those things, do some due diligence for yourself and see what makes sense for you, because everybody's situation is a little bit different. You have to kind of personally look in the mirror and investigate what's better for you. Do you want more? Do you have a lot of capital? In that case, you can invest a lot of money and then sell the covered calls against it. Or are you looking just from the premium side, from just making money on the premium, and you're not as concerned about the appreciation of the stock? Obviously, it'd be nice, but hey, maybe you have a bunch of different stocks and you're just looking to sell the calls and pull that money out. So again, everybody's in a different situation. Look at these things for you personally and then make a judgment call on what makes sense for you. So hope that helps. Thanks for joining me. Feel free to check out our website at tradersfly.com.